I would love to start the conversation. We'll talk about Key, we'll talk about your journey, but I would love to just dive right in and talk about the need for deterministic software within private equity and how they think about obviously adopting LLMs, but some of that tension in order of being able to deliver precise and accurate answers for the industry.
Yeah, totally. Well, thanks for having me.
Hmm.
First of all, as uh, it's very interesting, right? Like private equity as an industry, if you look at their core function, you raise money, you have a fund, you're looking at 10, 12 investments in that fund, probably more or less depending on how big the fund is. But you're looking at every investment almost being like 5 to 10% of your portfolio, anywhere between $10 million to billions of dollars. And when it is such an important part of your portfolio, understanding what is the reality behind the numbers, understanding the numbers themselves to the T. You're not looking to invest 5, 10, 15%. You're looking to buy the company out,
Hmm.
majority ownership, where you will be responsible as a fund uh, to keep the management team, operations, take the decisions, etc. And so when you look at what's at stake, it is really, really high stakes.
Hmm.
Pretty much so much that your one investment goes wrong, like you're wiped out of any of the returns
Yeah.
of the IRR, right? Like
Yeah.
one mistake.
Yep.
And so, like, when it's not deterministic, the things at stake are it's it's massive implications throughout.
Hmm.
And so understanding not only if this is the right metric, the right calculation, this is the right health of the business, but understanding how you arrive at that.
Hmm.
And the industry has been going on since over 50 years at this point of time. And people have done this over and over again. None of this is rocket science.
Yeah.
And so there's a process set to it in terms of how deep you can go, how deep you want to go. And so not having deterministic outputs, not having an understanding of like how did you arrive at this number
Hmm.
is massively uncalming for anyone in the seat
Yeah.
of a private equity professional when you have to make a decision
Yeah.
that actually could change the company, the employees, your own fund.
Yeah. Yeah. Your career is at stake with some of these decisions, or your career is at stake depending on the underwriting you do. You have to
Yes.
say you have to live with it.
And it's massive. And so when you're making a decision, I mean, that's why due diligence cycles could go anywhere from 3 months to 12 months.
Hmm.
And so when you're doing such an intense due diligence, not having a deterministic way of understanding, not having a really deep understanding of the numbers,
Hmm.
that's like, if you say something like that, that's like an excuse,
Yeah.
which you cannot go over.
Yeah.
And so determinism for us was core to why we build Key.
Yeah. And let's talk about it. What is key and what is your story? How did we get here?
Yeah. So Key, we're a solution that helps private equity professionals in their due diligence process, especially making sense of the numbers
Hmm.
and understanding the true reality of the business, the health of the business, using their customers, their employees, census, statements, etc., bringing out the, I would say, the depth in the numbers.
Hmm.
So everything related to numbers in the due diligence process, when you're going through massive amount of data in your data room, whether it's your customer information for consumers, softwares, etc., whether it's your employees and how they're performing,
Hmm.
we'll cut through those sometimes millions and millions rows of Excels, PDFs, etc.,
Yeah.
uh, and then go deep and tell you like where we think the health of the company is.
Hmm.
Now, as a fund, how you use that, whether you're an opportunistic fund or you're you're more, I would say, looking at stable businesses,
Mhm.
organic businesses, etc. That's for you to decide whether this information is
Mhm.
something that you want to take forward or not. So we help you almost to get to 90 to 95%
Yeah.
of those insights like very quickly so that you can say no to a deal earlier in the process.
Yeah.
That helps you save time to actually look at the deals which actually would matter to you.
Yep.
And with the same selectivity rate, you probably are able to do a lot more deals.
Yeah. What's the biggest file that has been ingested into Key? Like, do you even know?
Yeah, I mean, when a big file comes in,
Yeah.
the team's definitely excited
Yeah.
because I think that's one of the biggest things. I mean, Excel is the bread and butter of everything, right?
Yeah.
Uh, and it's like it's amazing how Excel hasn't improved
Mhm.
since.
Well, maybe that's just function of or expositive of how strong Excel is because
Yeah,
it's so modular.
yes, it is definitely, but not so much for private equity
Yeah.
because now they're dealing with millions and millions of rows, and Excel has its own limitations, and
Yeah.
that's why you have a lot of power pivots, etc., which kind of work on that. Uh, but what it does, it restricts the ability of an investor to cut through that data.
Yeah.
And so we've had times where sometimes like hundreds of MBs, even gigabytes sometimes,
Jesus.
which could be like millions and millions of rows, which
Yeah.
Excel would not like. Forget about
Can't even
even
open that.
you
Yeah.
cannot open that in Excel.
Yeah.
That was the thesis behind it that you need determinism, you need 100% accuracy, up, and then you need the ability to take the analysis to the next level that actually brought about Key.
Time and speed are important, especially in competitive deal processes. So that's key. You're building a, kind of AI enabled analysis and due diligence processes for private equity. Who's Rohan? How did you get here? Why did you start Key?
Yeah, no, I so just a little bit of my background. So born, brought up in Bombay, India. Born to a family of entrepreneurs, like
Hmm.
mom, dad, everyone in my family started their own started their own businesses or own firms. Saw a lot of ups and downs that failed quite a few times, then did a successful business. And so always was kind of entrenched in the entrepreneurial ecosystem
Hmm.
from the very start. Maybe not on the driving seat, but at least on the back seat. So always wanted to start something on my own. Obviously, did not have the the right idea right out of school. So decided that wanted to experience how corporate world works.
Hmm.
And so was good at math, had an inclination towards numbers, and so decided to join an investment bank called Natixis, which is right here, 50th and 6th.
Was that
Uh,
like a European Japanese
yes,
bank? French bank.
it's a French bank. It's the second largest.
Hmm.
They have big operations in New York, and so joined them, and then worked across various different departments.
Hmm.
So worked in global markets, structured financing, then banking. So I've gone through like the entire Excel, whether it's like modeling, whether it's like processes like stochastic,
Hmm.
etc. So worked through the bank across uh, whether it's analyzing public companies, whether it's analyzing private companies. Had a really good run in there. Had a really good team, a great boss. Went from the ranks of an analyst to director in less than 5 years, and then finally decided that it's my calling to
Hmm.
start something on my own, and didn't see the potential to be in the industry for the next 15 to 20 years with the same exponential growth that we had before.
Hmm.
So decided it was time to call it quits from there and start something of my own. Key actually started, and we can talk about that later, but uh, it was a more so B2B information services business before.
Hmm.
Then in January of last year, I think we came across a crossroads where AI was obviously
Hmm.
doing rounds. The contextual ability of AI was massive for this industry.
Hmm.
And so we knew that that would change, just contextualizing data, understanding what it means, uh, that would change entirely. And so private equity was actually primed for that change.
Mm-hmm.
And we're seeing that day in, day out, where like now even partners, senior partners are taking massive interest in how to go about digital transforming their own funds.
Yep.
And so, kind of picked up on that theme. A lot of companies were trying to obviously bring AI to private equity,
Mm-hmm.
but saw a massive gap in the industry where a good amount of these companies were heavily focused on trying to build like the next version of ChatGPT
Mm-hmm.
or trying to build like an advanced version of search and summarization tool, but for finance or private equity.
Yep.
Now, as investors ourselves, we realize search and summarization capabilities obviously are great, but they're not a typical workflow of a private equity investor.
Yeah. And also in a world where now everyone has ChatGPT, the pro or maybe the free plans are like the delta between
Yep.
you and ChatGPT, like you don't want to just be a rapper.
Yeah, and we can't compete with deep diligence or like deep research,
Yeah.
right? And so we came up with the thesis of let's not take a technology and try to push it into an industry.
Mm-hmm.
Let's really understand what is the pain point
Mm-hmm.
that we're trying to solve. And just because we've gone through that ourselves, my co-founder worked at Vista Equity
Mm-hmm.
Partners and then before worked at Goldman. So we've kind of had 14 years in this space, in the due diligence space as well as deal making space. And so we're like, what is the pain point exactly?
Mm-hmm.
And the pain point was that 80% of your insights come from your numbers.
Yep.
And not from like your sims or legal documentation, etc.
Yep.
And we did not see a single tool which was actually focusing on the numbers. And that's also because numbers were the toughest things to do.
Yep.
Like still getting 100% accuracy
Mm-hmm.
in numbers in any of the models is, you can't say that for us with certainty.
Yeah.
For us, like it was the pain point which triggered is like, hey, we need to solve this pain point.
Mm-hmm.
And the pain point was simple. Private equity professionals are stretched thin. They only look at about 10 to 15% of the deals that come onto their platform.
Mm-hmm.
And even in those, they cannot go deep inside because there's just so much you can do with the data that you get. And as a result, they end up spending time on the wrong deals.
Mm-hmm.
And that obviously takes time away from the right ones.
Yeah.
And so for us, it was like figuring out what is the toughest things for investors to do, and that's making sense of the numbers.
Talk to me a little bit about, you all had this initial thesis, felt like the gap was in quantitative analysis rather than just another
Yep.
search overlay. How did you go from thesis to initial product? Walk me through
Yeah.
that process.
I mean, we had our own evolution. We're like, I mean, everybody was talking about AI.
Mm-hmm.
So we're like, hey, well, why not already
Yeah,
try
let's
AI?
do it. Yeah.
Let's do it. Let's do it. And then we went in and then we had like text to SQL, all of these things
Mm-hmm.
to start making, like you could have AI code stuff, etc. But we constantly stumbled upon the same, I would say, roadblock is like two things. You cannot guarantee 100% accuracy.
Yes.
And if it was right, by chance, let's say 5 times right, you as a founder could not figure out how the software went from point A to point B.
Oh yeah, in your own audibility of your own
In
product.
our own
Yeah.
audibility. We just don't know. And I think this is very, very interesting because if you ask private equity professionals how they build out their analyses,
Right.
like the sum ifs
Yeah.
are so critical for them
Yeah.
that they see another formula,
Yeah.
they're going to get tripped up.
Yeah.
And so getting from a raw transaction based data to analysis or a final product,
Mm-hmm.
they need to see the exact same things that they've done
Yes. Yeah.
at
Yeah.
every step.
You could obviously you could get to the same output as the sum if with a different set of formulas. But if it's a different set of formulas, they're like, no, I don't trust
yes,
it. Yeah.
because now you have to trust and verify, right?
Yeah.
And for them to do that is like, okay, this is going to take me time.
Yeah.
Might as well I
Just do it my
myself.
old way.
And so that was a big insight for us.
Yeah.
It's not only about accurate results. It's about how you get to that accurate results, and can you as a founder of of a company that's actually giving them a guarantee of accurate results know how internally is
Yeah.
it getting built out.
Yeah, it's the stylistic thing, right? Like,
Yes.
are you matching the general style of private equity as an industry? Which you only know if one of two ways. You either were in the industry and know, or you do a lot of extensive research to sit with people and be like, okay, why did you use that formula in that scenario?
Yeah.
Why did you start it? Why did you start your cohort with month 0 versus month 1? Like, what is that? And it's like, oh, it's just industry standard.
Yeah, it is. Yeah, and I think that was very critical for us is we knew that we could not have anything less than 100% and complete determinism
Yeah.
to even get it in the hands of people. And so when we saw that a lot of tools were talking about 99% accuracy,
Hmm.
I mean, it sounds great, but when you don't know where that 1% lies,
Yeah.
is the big problem.
Yeah.
Because as I mentioned to the start of the conversation of what is at stake,
Hmm.
if that 1% compounds
Yeah.
into the final result,
Yeah.
like
It changes the vector.
it changes the vector completely.
Yeah.
You are not confident about the numbers. So for us, I think there were two parts of it is obviously AI had massive contextualization ability, but you also needed to provide the system or the infrastructure that AI is built on
Right.
with the right data and massaging it the right way
Yeah.
so they can contextualize the right things.
Describe for the audience what components of Key are purely deterministic, what components of Key leverage LLMs, and even how do you think about the platform? Like, when if you were onboarding a new product manager, how would you describe to them the core components of the product, or even a new user? That might actually be a better framing.
Yeah. So I think for us, it came down to let's actually take the entire process of an investor. When investors get data, they will clean or scrub the data.
Hmm.
They will then create multiple different views or cuts of that data. And then finally take those, combine those into building your cohorts or retentions, price volumes, etc., and then extract deep level insights from it. Now, if you
Hmm.
look at this entire cycle, you'll probably be like you'll yourself identify where is there no scope of any error whatsoever.
Hmm.
So, for example, the first one is when you're cleaning and scrubbing the data. We use AI, we use all software engineering, but it's much more about trying to give you ability of like, okay, your client IDs are different or your numbers are different. That doesn't have to be, I would say, 100% accurate, but
Hmm.
because you're having the user verify if this needs to be cleaned or not.
Hmm.
We use AI for that. And then when you pass that across to building out your numbers, that's where we tried out like 12 to 18 months back building out things with LLMs and then realized like, there's no determinism, no 100% accuracy, and
Yeah.
we could not play around with that number. So decided that we're going to make that completely deterministic. So none of that
Hmm.
is driven majorly by AI.
Yeah.
It's software engineering, and that's because we have a really deep understanding of the nuances of how things are built out.
Yeah.
And so, as I mentioned, it's not rocket science. There's a process to it.
Yeah.
And so for us, it was like if we can put in all of our knowledge and configure this in different ways where it becomes customizable for funds,
Hmm.
like we're actually building a tool which, if AI wants to get there and if AI gets to 100% accuracy, it's going to be at the same level as us.
Yeah. But I mean, I've seen the product a few times. I'm still even shocked that you all are able to do what you do, because the data inputs can be so complex, so varied, so messy. And if I'm hearing you correctly, part of the sauce, or at least part of two parts of what you all have innovated on, is you'll use LLMs and maybe some other computer vision, machine learning models to transform unstructured data, to get it into a structured format that your system understands. But then even honestly, the hard part is your system having all of the context of here's how you can cut these different points of these different data points. Like that is I know it's a lot because as someone
Yeah.
who manually takes unstructured data and then structures it, like you never know what you're gonna get.
Yeah. And the thing is, like, I think it all comes down to we've just done this over and over again
Yeah.
and understand. Like, you might think, like, we get this question a lot of times is like, oh, but how do you do things for different industries?
Yeah.
Like, every industry has its own metrics, etc. But actually, if you sit down,
There's a relatively
there's a
finite amount.
relatively few,
Yeah.
and I can literally count how many.
Yeah. It's just the investors don't live like the enterprise investors know all their metrics. The consumer investors know all their metrics. They
Yeah.
don't always know each other's metrics.
At the end of it, the base is numbers. You're just taking those numbers and placing it in different ways.
Yeah.
It's a derivative of that product. The numbers don't
Yeah.
change.
Yeah.
And so for us, it was just figuring out, like, do we know all the nuances of, like, oh, retention could be calculated 8 ways?
Yeah.
Do we know all the nuances in how data is massaged,
Yeah.
how data is created, how data is manufactured together?
Yeah.
And we realized we, like,
Yeah.
knew 90% of it.
Yeah.
And, like, we're not saying, like, hey, we will, like, just automate everything.
Mm-hmm.
We're saying, like, we'll get you 95% there. And so either as a fund, what is your thesis? You will use that and put it into your thesis and say whether this is a good decision or not.
Yeah.
Or at the same time, like, if you have a very niche industry,
Yeah.
like, we're not trying to be like, hey, we will try and get you to right at the end and you don't
Yeah.
have to do anything, right?
Yeah, there might be some random going to your point on niche industries, there might be some like random benchmark metric that's used for like nuclear energy
Yeah,
consumption. And you're
exactly.
like, look, we don't know like okay.
Yeah, I mean, yeah, okay, you wanna know and cut data for your nuclear facility in 10,
yeah.
10 ways. We'll do that.
Yeah.
Now, how you use that information as an investor is that's also completely dependent on you.
Yeah. How much automation you think is going to occur within the private equity industry in general? Because one, and correct me anywhere you disagree, but one reductive way of thinking about Key is you are taking a component of the associate or analyst kind of analytical work, and you're saying, hey, we can do the 4 hours of analysis and data cleaning that it would take you, we'll do those 4 hours in 10 minutes or whatever it is. And there's still obviously a lot of other work, a lot of additional work that goes into seeing a transaction through end to end. But there's certainly a strain within Silicon Valley and VCs in general that they believe that platforms like yours are not going to stop at just the 4 hours of work that an analyst or an associate does. They're for this industry. There's let's for argument's sake, they're going to go after all 40 of the hours. And I'm just curious as to how much do you agree with that? Do you think that's where you all with Key want to go? Do you think even the buyers even care about it or are thinking about it that way? I'm just would love to get your take.
Yeah, I think that's a really interesting question. How we see it is our main incentive is not to save hours.
Yeah.
I mean, we do end up saving a lot of time. Our main incentive is just the density of the data is to be able to give you information that you otherwise would have overlooked.
Mm-hmm.
And, like, that happens so many times because when you have such dense data rooms, etc.,
Mm-hmm.
it's just impossible for you to cover every nook and corner in there.
Yeah.
Every nook and corner has some kind of information related to it. And sometimes your alpha could come from there.
Mm-hmm.
And we've seen so many times where, like, as individuals, capacity limitation, resourcing limitation, human resources, etc., people, when they're staffed on like 5 deals, just end up doing, like, guessing what is the 10% most important things. Let's go through that and take a decision.
Mm-hmm.
Now we're actually trying to change the dynamic, not only in terms of saving time,
Mm-hmm.
but also in terms of being extremely exhaustive. in your full analysis, looking at every nook and corner,
Mm-hmm.
which might, if you correlate things, might inform you about a deal that you did not have information before,
Mm-hmm.
which actually could be your alpha
Yeah.
for that. And so we're trying to go to a path of let's actually give you information that you might have overlooked,
Yeah.
because we are able to do that a lot quicker and actually go through every permutation combination.
Yeah.
And coming back to your question, 40 hours can be saved. But like what private equity investors would absolutely love is when you show them something that they didn't look at a deal before,
That helps
but
them win.
system,
Yeah.
but the system was able to identify,
Yeah.
and that's the north star for us.
Yeah. Yeah. It's in other words saying, who cares about the 200K? I don't want to be flippant, but
Yeah.
who cares about the 200K labor savings
Yeah,
if you can help me bid, a half turn higher on a deal I really
exactly.
want that turns into the 3x, fund returner for me.
Yep.
I'll pay for that, day in and
Because
day out.
yeah,
Yeah.
because till that point of time where you're actually bidding, you've already spent millions of dollars on that.
Yeah.
And so like if your bid doesn't go through,
Yeah. It's painful.
it's really painful,
Yeah.
and you've spent at least a few months, if not more,
Yeah.
or work on that.
What are you hearing from the private equity industry in general? Like, there's all this interest in AI. There's probably at this point billions of weekly active users, if not monthly active users of
Yeah.
ChatGPT. Everyone wants to future proof their business. But what is on the ground? Like, what are private equity buyers, the MDs, the people who run these firms? What tech are they actually looking for? And then the second part of that question is, without naming names, can you walk us through how you got your first customer? Like, that is one of the most difficult parts of getting the momentum of a startup, is having your first customer that you win, go end to end. They love you, they're working with you, and that helps you get your second, which helps you get your third, which helps you get the fourth, fifth, sixth, whatever. So curious about both of those.
In terms of, I think the first question that you asked is how are people using it? What are partners looking for? Um, I think it comes from like the very first thing that they started is their portfolio companies.
Mm-hmm.
Like it was a change that happened across, and especially private equity, because you're not looking at extremely tech savvy companies or like high growth companies, which like VCs usually capitalize on. And so a lot of these companies were on a brink of like, if you don't change, you're going to lose the battle over here. And so the first things that we saw was portfolio kind of optimization in terms of technology.
Mm-hmm.
And then in terms of due diligence, if you're asking, I think there's still a big belief of going bottoms up,
Mm-hmm.
because a lot of the grunt work in terms of like building out your numbers, cleaning your data, etc., which have set processes,
Mm-hmm.
is done by the associates or the senior associates. You still see that on the VP, principal, or the partner level is quite more relationship based.
Mm-hmm.
And I still do feel like, yes, AI can definitely help because it makes you a lot more informed. We just had a client recently who said that the ability to speed up things made their VPs, when they were going for a management meeting in crunch time, a
Mm-hmm.
lot more informed about the deal.
Yeah.
So they were able to actually question a lot more and get a lot more insight into the company,
Mm-hmm.
which kind of trickles through. So I think it will capture the entire stack, investor stack,
Mm-hmm.
soon. But it's coming from a bottom up approach where, like, hey, let's make sure the associates, senior associates
But bottom up in the sense that associates are the ones finding you and being like, we want to use Key, or bottom up in the workflow of
in the
where.
work,
Yeah, yeah, yeah.
more in the workflow. But I do feel like associates are also extremely excited about this, because at the end, if you see, like, crunching your data, and I said the processes are the same. You're pretty much using the same formulas, looking at the same
Yeah.
data, the same way, etc. When I was in banking, I didn't enjoy building out spreadsheets. What I enjoyed was, hey, once I build them out, like what kind of insights can I actually
Yeah.
get from it
Yeah.
to inform my decisions and tell my VP,
Yeah.
And so that's like that's what everybody's aiming for. And
Yeah,
if you can get that quicker,
yeah.
yeah, I think that's a lot more useful.
Investors want to think about the various what if scenarios.
Yes. Yeah.
They don't want to have to do the brain damage to think about stitching all the data to get to some
Yeah.
out. Even
No,
though that's a
absolutely.
component of the job and like it compounds. But okay, cool. So it's a bottoms up motion, both from a workflow perspective. What was the story behind your first customer?
Yeah, I think the story behind the first customer was two things. I think we identified a gap in the market, which was like, hey, we literally asked the first funds that we worked with is like, do you even look at legal contracts before you understand? Like that, even in venture capital, you're not going to be like, hey, uh, met you for the first time. Can I see your legal documents?
No, no, that's crazy.
You're going to be like, okay, how are you performing? What's your ARR?
Yeah,
Like, how much are you retaining, etc. And then at the end is when you like look into your legal documents,
yeah,
etc. So we were quite puzzled of like what was happening out there and like what was given importance.
yeah,
And so for us, like the entire moat was like, hey, nobody's looking at numbers just because
mm,
it's the most like this is the hardest thing to do.
yeah,
And so when we went with that approach, and that also comes from the fact that we've been in the industry. And when you combine those two things and you're pitching, I think the most early, I would say, users or adopters, like literally understood the problem statement we are going after.
yeah. And so is it more of a, okay, in theory, you can help me speed up my diligence, the quantitative analysis, but I want you to show me that you can do it rather than just tell me. So did it flip to like talk to a few people and then it's get into the pilot stage, or like how did that go?
Yeah, I mean, we had design partners the same way that
Yeah.
everybody had, and we worked with them week over week, made progress. Week over week, realized text to SQL doesn't work.
Mm-hmm.
Week over week, realized LLMs every now and then give you wrong answers.
Yeah.
Uh, and that was the learning process for
Yeah.
us. And so for us, the path to determinism
Yeah.
wasn't just we believe in it. It was more of like we believe in it and we cannot get to determinism with the current
Yeah.
set of tools.
Yeah. So anytime there's a GPT 5, 6, whenever it comes out, anytime there's a new model release or an update to the models, do you guys like frantically check to see now has it flipped into these models have reached the parity for deterministic systems? I'm
Yeah,
curious. I have no idea.
no, I think it's great because as soon as that happens, like we have the knowledge to actually plug and play with that into our entire ecosystem.
Yeah.
And so we've built that out. It's just like I get really excited to see a new model. And it's like, how close does it get? How close does it get? How close does it get? And can
Yeah.
we plug and play it into our workflow, which requires determinism?
Yeah.
But like, unfortunately, that's not been the case
Yeah. They're
so
not
far.
there.
But we will definitely be there.
Yeah.
And so we're waiting for that moment. So we don't have to sit down and like recreate everything.
Yeah,
So
you just swap it in and out.
yeah.
Talk to me a little bit about, what's your ambition? What do you want to do with Key over time when you think about the success function 10 years from now? What does that look like for you? One headwind or negative commentary for building in financial services is that there's not a lot of like workflow platforms that are at scale. There's a lot of data platforms that are at scale. S&P, to a certain extent, you could frame Aladdin at BlackRock, FactSet, etc. But in terms of like core workflow, a lot of these systems get tucked into like an SS&C where they own
Hmm.
Intralinks, right? Which is less workflow, more like data hosting, or the same thing with like Deal Cloud being owned by Intap. But just curious about how you think about the 10-year version and where you see the opportunity.
We are not an AI tool for finance.
Mm-hmm.
We do not believe there can exist one AI tool for finance.
Mm-hmm.
We are focused on private equity
Mm-hmm.
and we feel like there's just so much end to end to your question of like processes. Like everything is a process.
Mm-hmm.
or whether you're going from, you know, collecting data, sourcing companies, to due diligencing, and then even going to like portfolio, like creating your 100-day value creation plan, etc.
Hmm.
And if you look at that, like that itself
Yeah.
is massive. And like by itself stats, like the amount that is spent just solely on due diligence is like upwards of $50 billion a year.
Hmm.
And so for us, like I feel like if we stay true to our motive of like trying to help investors go from point A, which is getting some data, to point B, which is informing them not only about the due diligence or diligencing a company, but eventually portfolio, being able to use Key through your entire end to end when you acquire a company to when you actually sell a company,
Hmm.
in between you monitoring also. And
Yeah.
there's just like so much you can do in this space. And so for us, we want to be a big part of the tech stack change in private equity.
Yeah.
And also to your question of, you know, there's a lot of platforms out there like Interlinks, etc. There isn't one platform which has like a system of record,
Hmm.
which actually can go in. There's just so much. It's like I'm very shocked by like how hedge funds like Citadel, Jane Street, etc., have been able to really mine their data
Hmm.
and like go to a next level of like analysis.
Hmm.
Like they'll use like financial engineering, etc.,
Hmm.
and really like advanced techniques. It's like then you see private side. Obviously, the data is not that available, but it still is like highly dependent on numbers.
Hmm.
And I do feel like that will change
Hmm.
in the future.
Yeah.
But I do feel like all of these analyses or just like crunching data will become like extremely table stakes.
Yeah. There's like no central system of record or data store for the company to like I doubt that there's a single private equity fund that could write a query and ask,
Yep.
out of all the companies that we've looked at over the past 10 years that were over 100 million of revenue, what were the leading indicators of success for them? All that information is
Yes.
stored in like it's like tribal knowledge for any of the firms,
Yeah, and
and
you
it's
you
not all captured.
you can even go dig deeper. And so this is where I think where we also had a thesis of like the data that's provided to you. I mean, that's obviously the most critical,
Yeah.
but you need to create like an alternate source over and above that
Mhm.
for systems to understand what that data means.
Mhm.
And we did not see like a single platform creating that. And that's where like converting your data into like your retention numbers, understanding what is the price volume effect, etc.
Mhm.
Like that's what we're creating. We're creating that mid layer, which has so much of information,
Mhm.
which otherwise is not picked up
Yeah. Yep.
by itself.
What would be the advice that you give to another first-time founder, whether they want to build an AI platform or whether they want to build in financial services writ large?
Start with the problem. Try not to look at the technology. Start with the problem. Nothing more than if you start with the problem and then figure out what technology works,
Mhm.
you're literally starting off with actually helping the users versus taking a technology and trying to drill that in.
Mhm.
And I feel like that, and that's where like, I feel like that adds up to the old adage of like focus
Mhm.
on a problem, make sure you crush that
Mhm.
and then expand.
Yeah.
And for us, it was just like numbers in private equity.
Mhm.
Again, not trying to boil the ocean over here, not an AI for financial services by any means.
Mhm. Yeah.
Um, and so try to solve a problem first.
Totally. I love it. And then my very last question for you is what is something that this audience can do to help you? One of the things that I love about the tech ecosystem is that it's very open, very willing to kind of give back, very willing to pay things forward. So if you were to ask to kind of the people that watch the show, like what would it be?
I think there are amazing founders building amazing things.
Hmm.
Like every day, like I see some companies where I'm like, wow, okay, did not even realize this could exist.
Yeah.
Which some of the reaction that we get from our users is like, wait, did not realize
Yeah. Yeah.
we could do something like this with
Yeah.
numbers. And I feel like, yeah, I mean, would love for people who are like in this industry to reach out, would
Yeah.
love to like riff off things. There's just so much to do in this industry. Like the entire ecosystem is going to change.
Yes. Yeah.
And it
100%.
is.
Yeah.
And so it's like really exciting to be a part of it and to work together to kind of push that, because it's not a battle between companies. It's a battle between an ideology which existed before.
Yeah.
And now that's going to change completely,
Yeah.
given that technology is going to start being front and center for like an archaic industry like private equity.
Yeah, which is wild given the amount of control private equity exerts.
Exactly. Exactly.
Well, Rohan, thank you so much for coming on. This was wonderful to talk about. A lot of ideas stirring through my head, a lot of stuff for me to think about. So appreciate you so much.
No, thank you so much for all the questions. And yeah, thanks.